Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Monday, the 18th of November, 2024. Lot of retail numbers coming out. When I mean that, I mean earnings numbers. So you have the Walmarts, the Targets, you got a bunch of them coming out this week. And on Wednesday, we get NVIDIA coming out. We will see what happens there. In NVIDIA today, you were down $1.83. They've been reporting that there are some server issues with the new chips as those chips get very hot. I don't know how they fixed that, but I'm sure it'll be done. I think Dell came out and said they're not having that issue. So I don't understand what it is, but I'm not that tech part. Amazon backing off a little bit right here. Interesting plays as I've been looking at them. Boeing up $3.68. I mentioned over the weekend they're letting go of a lot of people. They're cutting costs, doing what they have to do, and that's what's going to be required here. This is a rebuilding of a major company, and it's going to go on. Uranium jumped a little bit. Today, interesting, Russia came out and made a statement that under certain circumstances, they would allow the United States, remember, they make about 40% of the world's uranium there. So they would allow shipments to the U.S., okay? So that's the enticement, I guess. All right. But we'll let President-elect Trump deal with that. So I'm just watching what these markets are trying to do as a whole. And what they tried to do today is hold a little bit. But there's something brewing here. And that's something I cover in great detail tonight and did it over the weekend with a special report on the S&P 500 along with, and the word is along with the SPY because it's based on that. And what I did, and we can take a look at that, what I did in this special report is instead of focusing on the chart action, I figured out and went into what happens post-election in these markets. And I went back, looked 100 years with this piece of software that you'll see, 25, 50-year periods, 15-year periods, the last election, and it all points to one thing. And I want you to see that one thing. So just go to our website, iraepstein.com. On the top left, you'll see in green the special report. Give it a click and away you go. You can also move your cursor up here at any point. It'll take you to our website. And by the way, if you like that piece of software and what it does, through us, we can get you free access, a free trial. It's a good lengthy free trial too. And if you decide after the free trial you want to buy it, they offer a 20% discount to you doing so for the first month. So I think you'll find it very exciting. I now use it every day, so you can take it from there. Again, go to iraepstein.com. All right. In terms of news tomorrow, and I'm talking just the general news, you're going to get the housing and building permit data. You're going to get Red Book Group coming out at 7:55, and you're going to get the oil data at 3:30 as to where we're at on that. Oil, by the way, speaking about it, one of the things that was happening is we've watched that Norway's oil got disrupted, power outages, and Kazakhstan has been down for about a week. They claim they'll be back up Saturday, but these are two big producers of oil for Europe, and oil there got a strong bid, and it carried our oil even further today. But it didn't hurt oil that President Biden decided to give Ukraine permission to use certain missiles that have about 190-mile range from where they're shot. That can go inside of Russia pretty neatly. And obviously, Zelensky was very angry at the president for making it known to the world he was doing that because now the Russians are redeploying things away from that radius. I don't know. I'm not a military guy. When we look at SPY, if you go back on this chart, which I've done, you fill gaps just about all the time on these charts. I don't know if you'll fill the gap down here. That's the thing that I'm waiting to see. The market, as you can see, has got a pattern where it's starting to lean to the downside. You have lower highs, lower lows right into the main support at the 18-day average. You might fill that little bit of a gap in there. We'll find out. Wouldn't take very much to do it. And as I said, I have an interesting report on all this. Support zone still in place. Bollinger Band, any way you want to cut it. The market stayed over it for 2.5 days, and then it let loose, and the pattern turned bearish with lower highs, lower lows, and it went to, my friend, that 18-day average of closes. I call that the line in the sand, because I believe when prices are over it, you have a bullish bias. When you're under it, a bearish bias. Momentum also turned down, and it's got further to go. So the momentum is still in overbought territory. In order to get rid of it, it either embeds, which it's nowhere near doing, or it breaks a bit more to get rid of the overbought. I think that's still in the cards to a degree. We then go to Live Nation, and it just stays well bid, developing a bullish embedded reading. Market just looking still quite strong on the chart. CrowdStrike, should prices take out the lows of Friday, then I think you can get that break back into the 320 level where it's worth taking another look at. It's overbought right here, not enticing to me. Rivian, wanted to start covering that, so we're going to do that for a bit. Higher high, lower low. This is when Volkswagen said they're going to buy another $800 million into the partnership with Rivian. And the market, that lasted all of 48 hours, the euphoria. Then reality hit, where President-elect Trump may well take away the $7,500 credit. I don't know that Rivian's about a $7,500 credit. I think that hurts more GM, it hurts more Ford and the lower prices that those want to go. Rivian really is a fairly expensive car, any way you want to cut it. So things you got to look at. It is getting oversold here. I'm looking for the market to try to make a story against the 18-day average of closes. We got a bounce in K-Web, but that's all it is. The trend is still down. It is oversold, down, bouncing away from the Bollinger Band bottom. As I said, maybe we can get back to the 100-day average in that lower band. It's possible. We'll see. Toll Brothers, as long as interest rates stay strong, it's hard for me to tell anybody, hey, go out and buy the builders right now. I want to see light at the end of the tunnel, and frankly, I'm not seeing it. If you looked at the CME Group's Fed Watch page, which changes all the time, now there's only a 58% probability of a December cut. Nomura is the first major global stock brokerage firm that I know of, the majors, with a global presence, that came out today and said they do not expect a December cut, and they're only expecting 2 next year. So they're not seeing the deepness of it. We will see what happens. Lower highs, higher lows, don't know what to do with that market at this point. Home builders under pressure, down to the 100-day average. It's one of the numbers we spoke about last week. So it's between here and the lower Bollinger Band that I think the support will come in. But at this point, I see nothing that's friendly to that market. Financial services, as long as interest rates stay high and you embed, do we have the embedded reading? Both numbers today were over 80, as you can see. They were both over 80 on Friday, and certainly they were both over that on Thursday, so you're embedded. So that tells me on breaks, until the red line closes under 79, the pros are going to buy this market, looking for it to go even higher over time. In the industrial sector, XLI, breaking down, I look for support at the 18-day average. You're correcting an overbought condition in the market. On the energy sector, I'm still bullish as can be because of Trump's middle name, drill, drill, drill. And that's going to help that energy sector all the way through. I think you're going to see the Paris Accord from the United States. Again, we're going to probably leave that. Those are the early words that I'm hearing with this. In the gold market, well, you're bounced today, but that's about all that it is. I can't say that I'm very excited about the market right here. It is something that I think you watch, you look at, and I think it's got more carving out of a bottom to do. And they're certainly under the 18-day average. I don't tell traders to buy. Same in the silver market with an embedded reading there as well. copper, not an embedded reading, but there's nothing friendly here. And look at all this resistance that is now forming in the 4350 area from the 18-day average. The green is the 100, the gray is the 200. I see just a lot of resistance there. BND, now you're getting a bearish crossover where the 18-day average is getting underneath the possibility of the 200. It's over it by one tick. It'll probably slip there tomorrow. That is not a bullish signal. That is still a bearish signal for the BND. In the dollar index, a little bit of a break happening. Okay, how many days were you over the Bollinger Band? And here, I told you, I said, you have 1, 2, 3, 4, 5. I said, it's rare that you go to 7 in stocks. 5 is about it in the futures markets. And remember, this is very much tied to the futures market. So the market's pulling back there, and FXC would be the flip-flop of it. All right, if you do the futures count, you'll see what I'm saying, and you flip to the right-hand side. Do I think there's trend changes? Not yet. I think these are bounces at this point in time and not much more than that. So you put it all together, you come up with a game plan, and I have one for you. Please take advantage. Take a look at this special report, IraEpstein.com. Just look on your top left, you'll see it. Cursor will be up there. Just move your cursor there. You'll see the icon and give it a click. I'll see you first thing in the morning.